Welcome to The Explainer. Today, we're diving into something pretty fascinating, the sustainable Sukuk. Now, this is a financial tool that's quietly reshaping how huge green and social projects get funded all around the globe. And it does it by blending ancient principles with very modern challenges.
So that brings us to the big question, right? What on earth could Islamic law and a big solar power plant possibly have in common? Well, the answer unlocks a multi-billion-dollar market that's growing faster than ever. Okay, let's get into it.
All right, to really wrap our heads around how this works, we've got to start with the basic idea behind any Sukuk. And it's a totally different way of thinking about investing because it's all built on a principle of ownership, not debt. This table really just lays it all out. See, when you buy a conventional bond, you're basically just lending money. You give an organization cash, they give you an IOU, and you get paid back with fixed interest. Simple. But with a Sukuk, you're not a lender at all. You're actually buying a certificate that represents a piece of a real physical asset. Like a building or a fleet of airplanes or, yes, a solar farm. So your return, it isn't interest. It's a share of the actual profit that asset generates. And here's the official kind of technical definition from AAO-IFI, which is the main standard-setting body for the industry. But the phrase I want you to focus on is undivided shares in ownership. That's not just finance speak, it's the entire ethical and legal foundation of this thing.
So here's the bottom line, the most important takeaway. The entire relationship is different. You don't have a lender and a borrower. You have co-owners, partners in an asset who share in the profits and also the risks. That is a fundamental shift, and it's what makes everything else we're about to talk about possible.
Okay, now let's see how that foundation leads to something really powerful. This is where we find that surprising synergy. It's the unexpected common ground between two worlds you probably thought were miles apart. As it turns out, Islamic finance and sustainable investing have a lot of the same DNA. I mean, think about it. Both are built on ethics and responsibility. Both demand transparency, so you know exactly where the money is going. Both insist on being tied to real economic activity, not just Wall Street speculation. And both use something called negative screening to actively avoid industries they see as harmful.
And hey, don't just take my word for it. This isn't just a theory. The International Capital Market Association, they're the ones who set global bond standards. They flat out confirm this alignment. They point out that the core ideas of Islamic finance naturally line up with the UN's big sustainable development goals.
So how do you actually make one of these? Well, it involves this really cool process called dual screening, where a project has to pass two completely different but totally complementary tests.
It works like this. First, a project has to get through the Shariah screen. Is the asset itself compliant with Islamic principles? If it gets a yes, it then moves on to a second filter, the sustainability screen. Are the funds going to be used for recognized green or social projects, like renewable energy or maybe affordable housing? Once it clears both hurdles, a formal framework gets built and an independent party verifies it. Only then can the Sukuk be issued, and even then, there are strict rules about annual reporting to prove the money is doing exactly what it was supposed to do.
A solar farm is really the perfect poster child for this. It's a real, tangible asset that generates actual economic activity, so it's Sharia compliant. And of course, it's a textbook green project. Win-win. But the scope here is incredibly broad. It's not just about solar panels. The money can fund anything from massive green infrastructure to vital social programs, like, say, making sure kids in underserved areas get access to a good education. Both are seen as promoting the well-being of society, so both are eligible.
And this is not some tiny niche idea anymore. Let's look at the numbers and see how this market has exploded from a specialized concept into a pretty significant global force in finance.
Get this. Since this market really got going in 2017, almost $43 billion worth of sustainable Sukuk have been issued. That is a huge amount of capital being pointed directly at ethical and sustainable projects.
And what's really striking is the momentum we're seeing right now. After holding pretty steady for a couple of years, issuance just jumped in 2023 to over $13 billion. That tells you that major players, both issuers and investors, are really starting to embrace this. So where is all this happening? Well, it's concentrated in the key Islamic finance hubs. Malaysia and Indonesia have been the clear leaders, making up almost half of all the issuance between them. But we're also seeing really strong growth coming out of the UAE and Saudi Arabia. And look, this isn't some flash in the pan.
This growth didn't just appear out of nowhere. The broader Sukuk market has been on an upward path for years, building a really deep, sophisticated foundation that allowed today's sustainable market to take off.
And to make these big numbers feel a little more real, just think about one single deal from 2023. The global port operator DP World, which is based in Dubai, raised $1.5 billion with just one green sukuk to help fund its decarbonization projects. That is real scale, and that is real impact.
But of course, let's be realistic. No investment is a sure thing. To get the full picture, we have to talk about the unique challenges and risks that come along with this kind of structure.
And here are the big ones. First, that whole ownership, not debt principle, it means you share the risk. If the project doesn't do as well as expected, the value of your piece can go down, and your initial investment isn't guaranteed like it is with a bond. Then there's just normal market risk, of course. But there's one more that's really unique to this world: Shariah compliance risk. It's the small but real possibility that a new religious ruling could come out and change whether an instrument is considered compliant, which could create some uncertainty. Which brings us right back to the big picture. Look, we are facing a massive global funding gap for climate action and for social goals. And here we have a rapidly growing financial tool, one that's rooted in ethics, that is already moving billions of dollars of private money toward those exact goals. So it really makes you wonder, could this powerful blend of ethics and economics be one of the keys to funding a truly sustainable future for all of us?